What do we know historically about gold bull markets or precious metals bull markets and how to play them? We know that historically, gold has moved first against skepticism. It has, quote, climbed a wall of worry, which is precisely what gold is doing now. You've seen no spike in the market. You've seen slow, steady increases with lots of declines and lots of recoveries. Perfect, perfect, perfect market. You also know that in a gold bull market, at least historically, that the best of the best have risen first. And there's a great reason for this. In fact, two reasons. One reason is that with the beta in the market, that is, with a market that recovers to 180% gain in a weak recovery and a 1,200% gain in a good recovery, one doesn't need to outperform the market. One doesn't actually need to generate alpha against a market that gives you between 180 and 1,200% gains. If you just capture the gain, if you just capture the beta, or better yet, de-risk the beta by owning the best of the best names, you have great risk-adjusted returns. The other thing is that when generalist money comes into the gold space, it goes into the biggest, the best, the highest margin, the most valuable names, the Francos and the Barricks of the world. They move first, they don't move the furthest, and that's precisely what we've seen. The high-quality golds have done well. One thing that we're seeing in this market, which I think we'll continue to see, is we're beginning to see mergers and acquisitions. Remember, in the market that we're in, increasingly it's machine traded, as Frank Holmes has pointed out so well. Bigger companies have more liquidity, they have a lower cost of capital. In the capital-intensive business, the guy with the lowest cost of capital wins. So beyond the move that we've seen in the major mining companies, which has been a great move, we've seen wonderful returns to mergers and acquisitions, which we at Sprott continue to believe that we'll see. Normally, a gold bull market is followed midway through by the beginnings of a silver bull market. Gold leads, silver follows. Silver moves faster and further than gold does for various reasons. Its volatility, its low unit cost. And the asset class which traditionally has been the most volatile, both to the upside and the downside, are the silver equities, in particular the high-quality silver equities. So I would suggest to you in a very broad sense in terms of this market, first of all, if you think the gold price is going up, which I do, buy some gold. There's a reason to own it. That reason, from my point of view, is insurance. The second thing is, in terms of participating in this gold market, buy the best to begin with. Make sure that you capture the beta, because the beta itself is extraordinary. One really nice thing about the metals markets is that the best of the best can give you penny stock returns over decent periods of time with much less than penny stock risks. I'm not saying, by the way, don't speculate. I'm saying invest before you speculate. And when you speculate, focus yourself on the very best people and the very best prospects. The truth is, particularly in a city like Vancouver, where there's 1,000 or 1,200 issuers, and where everybody at the golf course is fantasizing over a 6-cent stock that goes to 36 cents, we tend to go from speculative to preposterous to absurd. And there's no particular reason to do that. I know that all of us, myself included, did it in 2011, 2012, and we were rightly spanked in the period 2012 forward. Remember that a bear market takes away everything that a bull market gave and more. There's no particular reason that any of us, myself included, repeat our past mistakes. All we need to do is remember back to our actions in the last bull market, and we need to remember the actions that made us money and the actions that lost us money. We need to remember, despite the ebullience that we may feel in a bull market, the dejection that we felt in a bear market. And I think we need to avoid the activities that caused us so much problem. You know, as investors now, we're given so many wonderful tools. One tool that's available to me simply is my own memory. Having been in this business for 40 years, I know the people who have made me look smart. I know the people who have made me look stupid. Sadly, the people who made me look stupid outnumber the people who have made me look smart, but there's no particular reason why I would have to return to them other than some desire to be spanked, which I do not have. In this city, You can rub shoulders with both the smart people and the stupid people as often as you want.